Hi everyone. So as we take stock of the markets now at this juncture, I wanted to just highlight about some of the key things that are happening in the markets. So first and foremost, when you look at the 2Q earnings season, which went past us and ended in mid-November, what we saw was there was a little bit of a loss of momentum on the earnings front. So if I look at the large cap indices, for example, where the anticipation was somewhere in the low teens, we ended up coming through at just about a double-digit mark, and that too if you were to ignore the oil and gas segments. Including the oil and gas segments, the numbers were a little softer. When we look at across the capitalization curve, for example, the mid and small cap, etc., the mid and small caps actually fared a little worse than the large cap spectrum during this earnings season that just went by. And there are multiple reasons for this. So one was obviously that, you had a little softer government spending in the first half, mainly because of the election dynamics, the code of conduct dynamics. And hopefully that should start showing some improvement as we head into second half. The second factor has also been that there has been a little bit of lower urban spending, as we can see from the commentary of some of the companies exposed to the urban segment, and which has also caused a little bit of loss of traction there. So that is the earnings picture as we stand now. The second other important aspect that went through the market was this entire dynamic around the US dollar and what exactly happened to flows. So one was that if you look at September end, that's when the dollar index bottomed, and which roughly coincided with the peak of our markets. And from that point, what we have seen is twofold things. The first event was that there was a gravitation of money moving from EMs to DMs. So from emerging markets to developed markets. So to that extent, there was a lot of outflows that we saw in the local market. If I were to put some broad numbers to it, right from the start of October, we would have probably seen around 2 lakh crores of selling from the FIIs coming through on the local markets. And if we net off from the primary markets, because there was some money which got refarmed into primary markets, that number would have been closer to about 165, 170 odd thousand crores. So there was a lot of outflows that we saw in the market, but the surprising thing is that despite these outflows, though a large part of it was taken up by the frontline indices, because that's where a lot of the ownership of the foreigners are. But we still saw that, after October, we have seen a little bit of pickup or flattening out of the markets on an overall basis. So that is the flow picture. Domestic flows continues to be strong. We don't have any concerns as such, but obviously one big engine to the market, which is the foreign flows, have been a little weaker. The second aspect which dominated was that China announced a stimulus, which was almost about 3% of its GDP, which is a fairly sizable kind of a stimulus that they announced. What that caused for markets was that there was some expectation of a pickup in China, and China had been a kind of a consensus underweight for a lot of global investors. To that extent, money moved from some of the other emerging markets into China to cover that underweight stance, which caused some amount of movement out of India as well. So that's the broad status of what happened on the flows aspect. Now, how do we view markets from here on, and what do we feel about markets? So the one part that I would say is that government capex clearly should show some signs of pickup, because all the election, even the recent state elections which went past in states like Maharashtra, Jharkhand, are now behind us, and hopefully that should start flowing through now. Whether we meet the government's stated ambition of 11 lakh crores, which Madam FM had announced in the budget, or not, we need to see, because asking rate has clearly moved up. But my take is that compared to the first half, we should definitely start showing an improving trend. The second part, which is also coming through, is that there is some amount of festive demand which came back up in the third quarter, which should also sequentially be better for markets overall, for things like auto demand, consumer durables demand, and all that, which should show some signs of perk up. That is on the overall earnings momentum kind of things. Valuation, if you look at it right now, the way we see valuations, the large cap indices are broadly trading somewhere in line with their long term averages. So we are not unduly concerned about the long term. Obviously, FY25 will fall a bit short because of the history of 1H. But we think that FY26 should be on track to give a superior or a high teen growth because of the favorable base effects of FY25 as well. So we are quite okay with that. Mid and small caps, when you come to that segment, we think that you could have a little bit more consolidation there for the next month or quarter or so. So the December quarter results, till that point of time, you might see some adjustment, realignment of growth optics and all that before the segment starts consolidating and moving up. One last thing that I also wanted to cover here was that there was a lot of bunched up large primary offerings which also came through in the month of October and early November. That also caused some pressure on markets at an aggregate sense, but we think that the ability of Indian markets to showcase that they've been able to absorb a lot of these flotations and not be too fussed about it. It also shows a sign of maturity of a market that is evolving. So overall, we remain fairly positive on the markets. Of course, near term, there may be a little bit of a hiccup because of dollar strength, because of issues like, the China stimulus and all, which could cause, markets probably moving sideways for some time before they start to consolidate and move up. So overall view remains positive, and we believe that India has a great prospect ahead of it. The kind of investments that are coming in, bigger themes that are coming through, like the lower carbon footprint, the move towards renewables, the move towards building out our infrastructure, whether it be metro rails, whether it be airports, whether it be ports. Various other things will continue to be a big driver for the economy. Thank you so much for the time to listen to me today.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.